Hi guys. Hi guys. Welcome to Stuff Seniors Should Know. I'm Mr. Bell, and today we're talking about how to open a checking, savings, and credit card account. Um, a number of students have asked me, how do I get a credit card? Or what should I do to get a credit card? How do I build credit? What is a credit score? And while I'm going to answer those questions today, I'm actually taking us a step back. I think it's important that we first explore what it means to have a checking and debit account and a savings account before we even start talking about credit scores and building credit. First, we need to make sure that we are financially responsible before we start to take on the additional responsibility of credit and debt. So our first step is actually going to be start talking about starting savings by building a savings account. Our second step will be learning to spend by knowing our limits with a debit card. Our third step is going to build credit. One way we can do that is by getting a secured credit card. And then step four will be actually getting the credit card, which some of you are really excited about. So let's go ahead and take it from there. When it comes down to it, you're going to first need to choose a bank. You have a few different options. You may look at nationwide banks, for instance, Wells Fargo, Bank of America, and Chase are each nationwide banks. They have branches in pretty much every city. They're readily available. They have robust digital apps that you can use on your phones. And so there's a lot of really easy ways to connect to those banks. Or you can choose a local bank. For instance, in Fresno, we have a few different local banks. We have like the Fresno First Credit Union, and we have other local banks. And then we also have credit unions, which I shouldn't have mentioned Fresno. Credit unions are connected banks that are typically individual or smaller on a local basis, but they have shared connections to each other, and therefore they honor and help out each other. So while you may not have an educational employees credit union local to you while you're traveling, say, in New York City or in Florida, even though you can find them here in Fresno, you can then go to a different credit union and they will honor your membership and they will help you be able to withdraw cash and other funds without fees. Otherwise, if you're ever in a pinch and you needed to pull money from an ATM, you would typically be paying some sort of fee. So for instance, if I go to the 7-Eleven and I want to pull out cash from an ATM, even though I bank with Chase, I would be paying a debit and ATM fee for withdrawing money through a bank that is not mine. There are different stipulations. For instance, with Wells Fargo, when I had Wells Fargo, I knew that if I wasn't within something like 15 miles of an ATM, that whole region would therefore be without fees. The bank would cover the fee. So there are different stipulations out there. But bottom line, you want to make sure you find a bank, and you want to make sure that your bank is federally insured. FDIC, pretty much all the banks out there are going to be FDIC, but this came from the Great Depression, and the idea was that anyone who has money in the bank is guaranteed at least $250,000 back by the federal government. So you don't have to worry about your bank collapsing, for instance, or going out of business or running out of cash. It's federally insured by the government. And if you're wondering, well, what happens if there is another Great Depression and the banks collapse? Well, at that point, what you have in your checking account won't matter because it's time for the apocalypse. So we want to open up a bank account. We're going to want to open up two accounts, and generally opening both accounts is the best start. You would open up a savings account and a checking account. A savings account, you may have heard from like your elementary school math classes, you build interest with your money in a savings account. This is true, but the amount of interest you're going to earn is going to be very, very low. Particularly right now, interest rates are at an all-time low. So you're making virtually no money with it sitting in your savings account. So then why? What are the benefits? The benefits are that it's safer than storing it under your mattress. It's protected from fire and from thieves for the most part. And while it does build that tiny, tiny bit of interest, the most convenient part is that it is digitally available to you. You can whip up your phone, tap on the app, and transfer money from your savings to your checking in case you ever need it. It's nice because it's digitally available. Your checking account is easy access for online purchases, auto payments, and debit card transactions. If you have an actual checkbook, you can write out checks. Checks are just pieces of paper letting a bank know that you have asked to transfer money from your account to someone else's account. A digital way of doing that is basically a debit card. Every time you swipe your debit card, you are basically confirming that you want to perform a transaction. You sign it by typing in a 4-digit PIN code. So for instance, you might type 1234, and that would be your really poorly designed PIN code. And that would be you authorizing the transaction. Checking accounts are useful because you don't have to then carry cash. You don't have to constantly go to the bank to retrieve cash. It's safer and easier. It is lighter. If you fill in the pool with your debit card, it's no big deal because it's plastic. And if you break your debit card, the bank can send and replace it within a few days. So checking accounts are very convenient. A lot of things I have set to auto pay from my checking account. For instance, I pay the city of Clovis for my power bills, my utilities. I pay PG&E, and then I have, say, for instance, my auto loan all comes automatically out of my checking account at the beginning of the month. Those are bills I don't have to worry about. I don't need to remember. They just pay for themselves after every time I get my paycheck. So how do I open a bank account? If I want to open a bank account, I will need at least two forms of government issued photo identification, like a valid driver's license or passport. It could be a birth certificate. There may be other ways of proving this if you're a minor. I was just looking, and most of these rules are pertinent to adults. A social security number or individual taxpayer identification number. So you don't actually have to have a social security number, because if you've paid individualized taxes, you also have a taxpayer number. You can use either of those. Um, they need to know where you live. The bank wants to know where you're at. So that doesn't need to be a permanent address. That could be your dorm. That could be an apartment. That could be your parents' house. They just need to know what address are you listing as your residence. They need your full contact information. That means name, address, phone number. If you're a student, you're going to have to prove you're a student by providing them, like, say, a transcript, or you can get a letter from your university showing them that you're a student. This will come into play in just a little bit. And sometimes accounts have a minimum deposit required. And so you have to have that cash on hand. For instance, one of the accounts I started required $100 for checking and $100 for savings when I opened it at first. So I had to bring in $200 cash. Now, so how much does it cost to open a bank account? Well, there's a lot of variety. So to keep it simple, I limited it only to one bank, one that I'm familiar with because it's the one I started with. So I started with a Chase College checking account. Young people and students can typically get banking at a reduced cost, and even then, $6 a month can add up. $6 a month is $72 a year, and if you don't make very much money, 72 bucks can feel like it goes a long ways. So you can pay the $6 a month, or if you can prove that you're in college, up until the age of 24 for 5 years, you can stay in a college checking account. I'll tell you, my account still is a college checking account. They've never flipped it over. And so I have a $0 monthly service fee. Another way you can have your fees waived is if you have electronic deposits made. Well, what kind of electronic deposits? If you're working part time somewhere and your employer does direct deposit, you show them your checking account number, your employer, and then they will send your paycheck digitally. One, that's usually faster, and two, it's usually safer. You don't have to worry about losing your check. But that would also qualify you. And it says that there's no minimum payment as long as it's coming from some sort of like employer, or an average beginning day balance of 5,000, which means you'd have to have 5,000 sitting in there. That's pretty steep. Let's move this. I'm gonna move my bubble up. There we go. That's probably better. Now, for your bank account, this is an example of an account for a bank for an adult. You'll notice that the fee is now $12, and your monthly deposits must be at least $500 a month, which is still very low. Even if you're working part time at minimum wage, $500 a month in a paycheck is not that much. Or $1,500 at the beginning of every day, or an average beginning balance of 5,000, which again is pretty steep. Something I do want to note though is with the checking account, if you go over however much cash you have in your checking account, you can end up paying an overdraft fee. On average, it's $35, but it ranges anywhere between 10 and 40 based on what I've seen online. So a checking account is money that you've put into the account, just like a piggy bank, and money you take out. It's more like you've asked the bank to serve as your piggy bank. And every time you swipe your debit card, they take money out. Every time you put it in a deposit, they put money in for you. So you're typically, with a checking account, very, very limited, and therefore only spend the money you actually have in your account. What does it look like? It's a digitized checkbook. I've had people ask me, how do I balance checkbooks? And I can tell you, I don't write checks. Um, and I know a lot of people my age do not write checks. It's something that maybe our parents do and our grandparents do, but Predominantly, almost all of my purchases are digital. The only time I ever spend cash is if I'm out at a restaurant or I need to bring cash to pay for something at school. Otherwise, everything else I buy is digital. Um, so here's an example of proving one, that I still have a college account. But two, these are each different transactions I've made. So for instance, I paid a debit card at Arco. This is the number of the Arco gas station, the city in which it's located, and it cost me $68 to fill up on gas. That's the truck life for you. I paid PG&E, my online auto payment for my electricity, paid $136 for the month. Even things like pulling out cash, like I needed $20 cash because I was buying someone a present. I took out $20, and then that also came out of the ATM, and it even tells you which ATM and where. It was the Chase on Herndon, for instance. So this is a good way of helping you track and see where your money is going. And then if you see anything unusual, you can let the bank know. So when can you get a credit card? Technically, you could go get a credit card right now, probably, but I am encouraging you not to do that. You should wait to get a credit card until you have proven you can handle the responsibility of having plastic cards. So what I'm telling you to do is I'm telling you first put away a few $100s into a savings account. Just a few $100s. And if that feels like that takes way too long for you, then you don't have the patience for a credit card. You should have some money set aside for savings. I also believe you should have an income, even if it's a small income from a part-time job. Unless you're making money, you probably should not be accumulating debt in the form of a credit card. So what's the difference between a debit card and a credit card? Well, functionally, they look the same and they swipe the same. They also typically spend the same. A debit card is directly from your checking account. There's no interest paid, and you have to have money at the time of purchase. A credit card is different. You don't have to have that much money on hand. It is paid with credit from the bank, which is basically a borrow. If you pay on time, which is usually monthly, then you don't owe them any money beyond that which you borrowed. That's our goal. Our goal with a credit card is to avoid paying interest. And we're going to avoid paying interest by paying it off on time every month. It has a credit limit. So for instance, I think later on we'll see my credit limit for my credit card is about $8,000. I have not asked it to be increased because I shouldn't be spending $8,000 a month on a single card, particularly since I don't make that much in a month. And I want to pay it off every month. So I don't need additional credit beyond that point. But if I make a $300 purchase, I need to know that I have $300 in my account that I can cover it with. Otherwise, I should not be making that purchase. And then it tracks your record, and that's your credit score. So we'll talk about that too. So how do I get there? How do I get a credit card? Well, honestly, at first, since you have no credit score, you have no history, you have to prove that you're responsible. And one of the ways you can do that is with something called a secured credit card. This is a secured credit card. I found this on NerdWallet. They rank different credit cards and banks based on like their fees and their perks. This is a secured credit card with no annual fee. That's what we're looking for because you're going to have to pay a fee regardless. So we're picking one with a $0 fee so that we're not losing any money right off the bat. You can earn this with a very poor credit score or non-existent credit score. And the way it works is it's like a preloaded gift card. You will put $200 into it. And so let's say I'm working with Bank of America. I give Bank of America $200. I can now use this like a credit card. However, I'm going to have a $200 limit, more or less functionally. I can make a purchase, and if the purchase goes above $200, let's say I make a $300 purchase. At the end of the month, if I haven't paid off, I'm messing up. We're gonna pretend it's preloaded. If I fail to make a payment, they just take my $200 deposit. So you're basically saying, trust me, I'm good for 200. Let me continue to borrow 200 whenever I need it. But for now, I'm just having you hold on to $200 for me. Because if you can't pay it off in cash at the end of the month, they're going to spend the $200 deposit. This will show that you can reliably pay off your card month to month and slowly build credit that way. So how much do I need to build my credit? What is a credit score? You won't know your credit score unless it gets checked by a credit company or a bank. And they can do that for you. Often they'll do it for free because they're eager to know your credit score. So that way they can start digging into your pocket in other ways. But Credit scores are ranked anywhere, it says here, between 300 and 850. And our goal is to build our credit score into the good range so that we can get quality credit cards that have no fees and lower interest just in case. They also typically come with better perks, for instance, cash back. Um, Throughout college, I had a card that was 1% cash back. So everything I bought, 1% went back into cash at the end of every month. So that reduced my overall costs by 1%. Why would I not use that instead of my debit card? And that's what banks want. You probably won't have a lot of money, so we want to avoid fees, and that's why we want to get into the good range. So if we're in the good ranges, we can qualify for the best interest rates. As our score goes lower, we may have higher interest rates, and we may not qualify for certain loans. So for instance, those places that sell some of the beater cars, they'll tell you it doesn't matter if you have a low interest rate. I mean, if you have bad credit score, because they'll just give you a higher interest rate. So, how hard is it? The good news is most Americans have a fair or better credit score. Over half have good or even better. So, you just have to be in the top half. You can get there by making sure you stay on top of things. Your credit score is non existent, but you don't start with an A. Actually, in this instance, you're going to start with an F and you have to build your way up. But the good news is it doesn't take super long to build your way up. The bad news is it doesn't take very long for you to drop your credit score. They move pretty quickly sometimes. But we're going to play to our advantages. So what's an example of a credit card I could get? Well, once you've built up to, say, a good credit score, you can get something like this card from Chase. It has no annual fee. It does have a 15% APR, which means if I spent $100 that I didn't pay back, at the end of the month, I would owe the bank $115. There's so many credit cards out there. Right now, it's very new, and that's why I didn't look into it. Apple has a program that allows families to have a family plan for a credit card, and that's so the children in the family can build credit. And then the parents can monitor it, and the parents have parental controls over what the card can or can't buy, how much the card can purchase, etc. But for simplicity's sake, this is a student card. They would award it to anyone who can prove that they're a student and that banks with them. It says good, but you can even have a little bit less actually to qualify for this if you go through your bank. So if you bank with, say, Wells Fargo, you can qualify for Wells Fargo student credit card. So how do I build credit? Well, this is a breakdown of how much impact each different action has. Having a history of good credit is the most important thing. And unfortunately for you, you have no history. So that's what you need to do first, is start proving that you can build credit. My first credit card did have a low limit. I want to say it was $200. But after each month, around month 6, they then bumped me up to $800 in credit. And then it continues from there because they begin to trust you over time. They also want to make sure that you're not maxing out your credit card. Maxing out your credit card makes them a little bit nervous. Granted, they typically get their money back, and that's why they'll give you the credit. But the people who continue to teeter on the edge of their credit are the ones who are most likely to default and not pay them back, and that will lower your credit score. So if you have a credit score that allows you to have $1,000 in credit, you want to stay, the internet suggests, below 30% of that as much as possible. So that means only being at $300 worth of your credit limit. The length of your credit history. This means how old is your longest loan. So for instance, I had a student loan of about 5 years, and then I switched banks, and that loan went from being a 5-year-old loan to a 0-month-old loan. It's the same amount. I just transferred it from one bank to the other, but that lowered my credit history because when they look back at the report, they're like, oh, well, his loan's just a baby. How long has he been paying this off? They couldn't tell. And for that reason, my credit score dipped just because I switched lenders. So the history of your loan matters. I'm not encouraging you to go out and get student loans, but student loans are examples of loans that you'll have for several years, and those are actually really effective towards building credit. Mix of credit types. This might be car loan, rent, student loan. It's just what different types of loans do you have out there? And then finally, recent applications. Every time you have your credit checked, whether that's because you're looking to buy a house or looking to open a new credit card or open up a new car loan, the more frequently you're doing credit checks, the lower your credit score will go. That's a red flag. It makes you look suspicious or reckless. So then how should I build my credit then? I have a brand new credit card. What should I do? Use it on all of your purchases, all of your everyday purchases, except gas, because there's usually a fee for using your credit card. But just everything. Going to Taco Bell, swipe it. Buying something on Amazon, swipe it. As long as you know you have that money. I use my credit card just exactly like it was my checking card. I only use it like a debit card. I only use the money I have, and I pay it off on time, early if possible. I have it set to automatically pay from my checking account, so it will always be on time because I always have that money in my checking account. But I can also pay it off earlier if I so choose. So sometimes when I remember, I just hit the pay now button and it just pays it automatically. I don't need to do that, but I do. Don't spend more than you know you have, and be patient. It will take time, but within a year or so, you can earn a fair score. So that's stuff I think seniors should know. I'm Drew Bell, and until next time, good luck, guys, and build that credit.